Mutual fund. Simply put, the money pulled in by a large number of investors is what makes up a mutual fund. This money is then managed by a professional fund manager who uses his investment management skills to invest it in various financial instruments. As an investor, you own units, which basically represent the portion of the fund that you hold based on the amount invested by you. So, the mutual fund, ito yung pera na nakalaan para sa isang business. Kumbaga, meron kang pera and then you are willing to parang willing kang ipautang ito sa isang businessman para mag-start yung businessman na yon na i ituloy ang kanyang business. For example, meron kang 10,000 and then merong isang businessman na lumapit sa'yo na willing siyang hiramin yung pera mo and then ibabalik niya to with 10%. So, ayun yung sinasabi dito sa mutual fund. So, what are the different types of mutual fund? Are you looking to invest for a short period of time or for long term? To be able to choose a fund that perfectly caters to your needs, you need to be aware of the various kinds of fund that are available. Types of fund: A. Debt mutual fund. Debt mutual fund works on borrowing. So what are the conditions that are usually laid down when one borrows? Number one, reasonable assurance that the principal investment will be returned. Number two, the interest that will be generated based on the rate of interest, also known as the coupon rate. Number three, tenure or the time over which the principal will be returned. Debt funds help bring stability to your investment for portfolio since they are lower in risk as compared to equity funds, and their aim is to generate steady return while preserving your capital. Letter B, equity mutual fund. When you invest in equity, you are considered as an owner of the company to the extent of your investment. So, naturally, like any owner, your profit is linked with the performance of the company. The higher the profits of the company, the better is the share price, and hence the better your gains. Equity funds with a higher risk carry the potential to deliver high returns. And to help counter this risk, mutual funds are invested in multiple companies that usually don't belong to one or correlated sectors. This is known as diversifying, which reduces risk. Letter C, liquid mutual fund. In financial terms, the word liquid simply means how fast can I get my invested money back. A highly liquid asset is as good as hard cash. Liquid mutual funds have the least risk factors and may give you returns that are slightly higher than a savings account. These funds invest in faster maturing debt securities, therefore making them less risky. Letter D, hybrid funds. As the name suggests, hybrid funds are those which have a combination of assets classes such as debt and equity in their portfolio. That is, they invest in a blend of debt, money market instrument, and equity. What are the advantages of mutual fund? Number 1. Mutual funds are flexible. Most people have differing pattern of earning and spending, which is why investments need to be flexible so as to allow you to invest as per your situation. There are various characteristics of mutual funds which make them flexible. Example, minimum investment amount, types of schemes, investment frequency, and withdrawal option. Number two, mutual funds are liquid. In open-ended funds, where you can buy and sell on any business day, you can get your money back generally with 3 working days. Number three, Mutual funds are transparent and relatively safe. Naturally, there is a feeling of uncertainty or cautiousness you feel when you're handing over your savings to somebody. In the case of mutual funds, your money is handed over to a professional whose job is to keep track of markets and look out for the best opportunity for you. What's more, mutual funds publish a monthly fact sheet which basically lists out all of the important facts you need to know about the scheme you've invested in. In addition, the NAV is published on AMFI and on funds company websites on a daily basis, ensuring that you're always in the loop about your investment. Number 4, mutual funds help you diversify. Like the old sayings, don't keep all your eggs in one basket. Diversifying your investment will help you lower your risk. As you have previously read, equity mutual funds invest in shares of various companies, whereas debt funds invest in government securities, NCDs, CDS, CPs, bonds, and other fixed income securities. Thus, as an investor, you will be able to have a diversified investment basket. Number 5, mutual funds reduce the transaction cost. The power of bargaining lies in buying anything wholesale. The rate of buying in wholesale will obviously be much lesser compared to the retail rates. Now, apply the same principle to mutual funds, and what do you get? With many people pulling in their savings, you get the advantage of the power of bargaining, which reduces the all-over transaction cost. Number 6, professional management. Do we cut our hair at home? The answer is an obvious no. We go to the barber who is an expert. Similarly to in mutual funds, your money will be managed by a professional fund manager who will have experience in managing funds backed with sound research and understanding of trends. Isipin mo ito. 10 kayong magkakaibigan na gustong mag-invest, pero karamihan sa inyo ay hindi marunong pumili ng mga stocks at bonds ng mabubuting kumpanya. Ang isa niyong kaibigan ay isang expert na nag-aaral ng business sa kolehiyo at nagtrabaho at nag-invest sila sa stocks exchange ng higit 20 taon. Dahil magaling siyang pumili ng investment, tinipon-tipon niya ang inyong pera at hinayaan niyong siya ang mag-invest para sa inyo. Binibigyan niyo siya ng kaunting service charge. Kumikita kayo depende sa kung gaano kagaling ang investment ng kaibigan nyo at kung gaano karaming pera ang pinahiram mo sa grupo. Ganon gumagana ang sinasabing mutual fund. Ang mutual fund ay isang investment kung saan maraming tao ang nagtitipon-tipon ng pera para mag-invest sa assets tulad ng stocks, bonds, money market at iba pa. Ang mga fund na ito ay pinangangalagaan ng mga profesional na money manager at ang layunin nila ay i-invest ang resources ng fund upang kumita ng pera para sa mga shareholders. Ikaw ay magiging shareholders kapag nag-invest ka sa isang mutual fund gamit ang pagbili ng kanilang mga shares.